Dear investment professionals, dear ladies and gentlemen, dear friends and business partners, welcome to the 63rd edition of the Awards for Best Financial Information, which is amazing. I mean, I wasn't here at the first edition. This afternoon I went with Luc van der Elst looking at the vase, who were the first winners in 1950 something. It's an amazing story, but it's true. And by the way, who is calculating the number of years will realize that it doesn't match. We're missing a year somewhere. It's not a joke. Okay, the roots of the association, indeed, we have been founded in 1958 and we still exist. And the award is already for the 63rd time, and we plan to go on with this for a very long period in the future, because we believe that transparency of information, whether that information is financial or is non-financial, is the utmost important part of our jobs as investment professionals. Because there is no efficient markets, there is no efficient stock markets, if there is no information and transparency of information. We have realized a number of years ago that the financial information, however, is insufficient. And that is why we have moved it as well to non-financial information. I'm here maybe also to convince you that ESG and everything that has to do with environmental, social and governmental is of the utmost importance. And I not only tell you that as chairman of the Belgian Association of Financial Analysts, but also as chairman of EFRAG. As you know, we are working very hard on the ESG rules. And probably a number of companies or stock-listed companies are not going to be so happy with these rules, but on the other hand side, they do enlighten and increase comparability of companies, comparability of financial information, and comparability of non-financial information. And for the Belgian Association of Financial Analysts, this is really what we're striving for. We do that not only by organizing the awards for best financial information, we also do that by giving different trainings. Some of our training programs are very known to everybody here, or a number of you have been in class with me and other people a number of years ago. And then we think about the CEFA, of course, which is the Certified European Financial Analyst degree. But of course times have changed and we have also moved on. We have other diplomas as well, diplomas that are specifically now looking at ESG, such as the CESGA, or even a shorter version of the CESGA. And last but not least, we're launching programs that are also going to go a lot deeper into AI and these items and cryptocurrencies. So there's a number of points that really is changing very rapidly now. I would like to have our analysts and all the investment professionals to go with us in that same direction. But this evening we have the Best Financial Communication Award 2023. And we are happy because we've been hosted at the premises of the winners of last year at Telenet, which is of course a bit bizarre in the sense that, and I already had a short conversation with Anne Kalewaerts 5 minutes ago, saying, right, this is nice, you win the award for Best Financial Communication and then you delist. But on the other hand side, if you look around, and this is something which is also going to come back a number of times this evening, information is not only there for companies that list, but also for companies that delist, of course. So it remains very important. Welcome again, thank you very much. I will give the floor immediately to Anne Kalewaerts, and I will read your title, not to make any mistake, Chief Corporate Development, responsible for people, corporate affairs, everything has to do with new business, ventures, partnerships, and digital transformation. Anne, the floor is yours.
Thank you, Hans, and a very, very warm welcome, all of you, to our beautiful Telenet premises. Normally my colleague, Erik van den Ende, would be here. He's CFO of Telenet. But he actually has a meeting with the brand new 100% owner of Telenet called Liberty Global. So duty calls, he's in London for the moment, so I'm taking the privilege to be able to talk to you tonight and to be able to welcome you. And as you said, Hans, it was interesting to see that the panel this evening is about to list or to delist. we'll be looking and listening very carefully to what the experts have to say, with an experience of 18 years of being a listed company and 5 weeks of being a delisted company. So we'll hear if it was the right choice or not, but will be very interesting to hear the debate. There's good news though for everyone in the room, and the fact that we are delisted probably means that we cannot win the Best Financial Communication Award anymore, so there's less competition, because we have won it twice, and that has to do with the excellent finance team who's in the back, several colleagues, our investor relations team, our corporate legal teams. We have a very warm heart for this beautiful vase and this beautiful award, because it really puts in the spotlight the people who work day in, day out on making this communication transparent, reliable, informative, and I think the team of this great team did a fantastic job. So we were delighted being able to take it home last year. This vase stood in the finance floor, I think, for a year. Now and then I saw people give it a small stroke of recognition and happiness. But today we're going to give this heavy, because it literally is very heavy. I tried, Rob, to weigh it yesterday. It really weighs a ton. So we'll give this heavy reward, this heavy award and this heavy responsibility to hopefully a beautiful winner tonight. And I wish you a wonderful evening, a pleasure and a fun debate to listen to, great food, and thank you very much for being here.
About this vase, it's true. It's a Val-Saint-Lambert, and I think it's built in 1957 or something like that. It's slightly damaged, so somebody, we do not know who, has given it more than a small stroke. And I'm not looking at Telenet at all, but it's true that it weighs a ton and it cannot be reproduced. When we asked to insure it, that was the answer that we got. They said, how are you going to insure it? Because if something goes wrong, it cannot be reproduced. So handle with care. It is my honor to introduce Wim Allegaert, the chairman of Belier, which is the Investor Relations Association in Belgium. And there is a very, very important link, of course, between the Financial Analyst Society and the financial analysts on the one hand side, and the people that do all the work in excelling the communication of corporate companies, such as all the companies quoted on the stock exchange, and that is, let's say, supported by Belier. Wim, the floor is yours.
I think it's on now. Thank you very much, Hans. It's my pleasure to be here. It's my pleasure to be here to lead the panel. I think there's a bit of an echo. Otherwise, I'll switch this off. I'll take this off. This is probably better. Yes. Okay. Thank you. So it's my pleasure to be here as chairman of the Belgian Investor Relations Association and to lead tonight's debate. Belier and ABAF have a long-standing relationship and a long-standing cooperation. And frankly speaking, for us, this is one of the most important events of the year, because each and every investor relations officer always dreams of taking the vase home. So it's always a very exciting evening to be here. Can I invite the 4 panelists to the stage, and then I will briefly introduce them before we touch upon the topic which is very relevant at this stage, to list or to delist. So can I ask the panelists to come on the stage? So thank you very much for being here. I will introduce each and every one of you before we go into the topic. So I'll start at the very left for you. There we have Benoit van den Hove. Benoit is a lawyer by training and started his career as a lawyer at Linklaters, and then had a very long track record at ING, where he was responsible for all legal matters in financial markets before he actually joined Euronext to take over from Vincent van Dessel last summer as CEO of Euronext Brussels. Next to Benoit, we have Sophie Rutten. Sophie has a law degree from, amongst others, Notre Dame de Namur, also KU Leuven, but also the New York University. And she's a senior counsel at Allen & Overy, with obviously a specialization in corporate law, which will be very relevant for tonight's debate. Sophie and Allen & Overy recently worked, as you undoubtedly have seen in the press, on the recent transaction also with Shurgard for 300 million, which is quite recent. Next to that, we have Mr. Ludwig Kriel. Ludwig is economist from the Ghent University with a master's degree in management from the Vlerick Management School as well. Ludwig has a very impressive track record, primarily at CMB. He was financial director. He was member of the board of the directors. He has been CEO of the company. He has been chairman of the management company all the way until 2022. So all very, very recent. Next to that, he also holds or has held directorships at Euronav, Wakwong, West of England Insurance Services, and Air Contractors. He has also been chairman of Petercam and then consecutively Bank de Groof Petercam. And he has been chairman of this bank also from 2018 until 2021, so also that very, very recent. He was also director and chairman of the media company De Persgroep, also chairman of Medialaan, and chairman of DPG Media, which was created by the merger, obviously, of Persgroep and Medialaan. And since 2016, he has been chairman of the Royal Belgian Shipowners Association, and since this year, also director of the holding company We Are One World, which is the organizer of the Tomorrowland Dance Festival. That might ring a bell to some of you. And then next to that, finally, we have Wim Goossens. Wim Goossens is economist by education and training. Wim has a very long track record as a corporate banker, amongst others with ABN AMRO, also RBS, Royal Bank of Scotland, and BNP Paribas Fortis. He has been working in corporate finance at Alantra, and since last summer he has joined Clairfield as partner. So to each and every one of you, very welcome. I think we have a very knowledgeable set of panelists here to talk about the topic to list or to delist. What I would like to do to actually kick off the conversation is ask the same question to each and every one of you, which is, what is your most important observation on stock markets from your experience? I do know it's a very broad question, but it will allow for a very broad and relevant answer as well. We can go in this direction, and then I'll just pass the mic to him.
Thank you. The observations over the past couple of years are mixed. I think in general we have seen a lot of companies disappearing from the Euronext Brussels market, and honestly I'm pleading guilty. When I was at BNP Paribas, I did more delistings than listings, amongst others with Ludwig. We worked on the delisting of CMB, and the reasons why a lot of companies disappeared are multiple. We can elaborate on that later. The question for the listing is really, what is the purpose of the listing? Is it a currency that you will use going forward? How do you deal with your visibility towards your customers, but also your competitors? For some companies it's not very attractive to be listed, because then you have to disclose a lot of information to your competitors. And for other companies it makes a lot of sense, because you want to create liquidity for family shareholders, and if there's no other way to do it, you do it through a listing. But in general, and one of the biggest observations is that the Brussels stock market in many cases does not provide sufficient liquidity for a lot of companies and a lot of investors. what will happen in the future, I mean, we leave that up to Benoit because he's the one who needs to do the publicity. Ludwig?
Thank you. What was the most relevant observation I have had in relation to stock markets in general and the Brussels stock market in particular? I mean, I think what struck me the last couple of months, years, is the, from time to time, unexplainable volatility and reaction of share prices on news which is coming out in the market. Companies come out with good, solid results in an economic environment which is okay-ish, and yet the share price drops with 5, 6, 7, 8, from time to time even more percent. This is something which struck me, which I really do not understand from time to time. It's as if the main good news is diluted so hard and so quickly by a minor issue which has been picked up by journalists, by analysts from time to time, and they mention that, and all of a sudden that's enough for a market to react negatively on a share price. And I say this because volatility for someone who is listed and for someone who is a controlling shareholder of a listed company is something which is not really good. If he really wants to use his share or the share of the company he controls as a currency, at least we want some stability in the share price, or a share price which follows actually the going on of the company itself, the life of the company. And that's where that struck me the last couple of years. And not only in Belgium, by the way. Yeah? This happens even more in bigger markets, in really volatile markets. There's someone who picks up something and the share price drops in an unexplainable way. That's something which struck me over the last couple of months.
And for me, like Wim, I must admit that recently I've worked more on take private than on IPOs, but I remember when I started in the 90s with one IPO after the other. CU, Netiska, they're all gone. For me, I think in my practice, the main advantage of being listed is the access to capital markets, and specifically for equity, it is and it remains a great tool, whether it's a rights issue, so a public transaction with existing shareholders, or a private placement and an ABB. The listed entities are able to raise significant amounts of money in very short time. If you see recently the Cofinimo and the Shurgard ADBs, there is 200 or 300 million almost overnight, with a preparation of a week or two. So that's I think a quite light procedure with limited costs. That's a great advantage. And also recently, I think the fact that under the prospectus regulation you can now issue new shares up to 20% of your market cap without a listing prospectus, and have this type of undocumented deals, raising significant amounts with quite limited timing procedures.
Thank you. Thank you for the question, Wim. Well, there's obviously a lot to say. First thing that I'd like to share is if you look at indeed the number of companies listed on Euronext, if you look at what happened approximately 50 years ago, we were at 350 companies for a total market cap of a few billion euros. Now we are a bit more than 100 on the regulated market, and a bit more than 10, 15 on the non-regulated markets, and we have more than 300 billion euros of market cap in aggregate form. And so what does that mean? That means that companies have grown and are much larger than what they used to be. We had 2 years ago a very large listing, the one of Azelis. And then, because the question of to list or not to delist is the number one question that I get from all the journalists today. Then I ask them the question, what do you prefer? Do you prefer to have one Azelis, or do you prefer to have 100 companies of 60 million euros of market cap? And I get no answer to that question, and I think that that's a fundamental question. So which companies do we want to have on our exchange? And we're very happy to welcome very large companies as an Azelis, because they have also the good size, and that helps, of course, on liquidity and visibility on the market. But what strikes me as well very much on the Belgian market, if you look at all the delistings that took place since 2018, you arrive at an amount of 11 billion euros of market cap that disappeared from the market, and I don't take into account RTL Group, which was 7 billion euros because it was a third listing on Brussels. If you compare that with the new listings, it's 40 billion euros. So there is a kind of perception that things don't go well. But if you compare the numbers, it's matching in our advantage. But also looking at what happens on the secondary offerings on capital increases. Since 2018, we had 17 billion euros of monies that were raised by companies listed on Brussels, 40% for the real estate, 36% for life science, and the rest, all the other sectors. And for this year, I'm really impressed by the resilience of the market, because we, at the end of November, will reach about 2.6 billion euros of monies raised by the companies listed on Brussels. And that's slightly below the average since 2018, and it's 2.8, and so we'll be at 2.6 billion euros. So that shows how resilient our markets are, and how well the access to the capital is still there in a market, in an environment where the full value chain of the financing, from the mortgage to the more complex transactions, this full value chain is under big pressure. And I'm still impressed to see how much has been raised this year.
Thank you very much for the input. What I would like to do is some kind of, well, a brainstorm. It's not really a brainstorm because we're all very knowledgeable about the financial markets, but the first question would be, what are, and we will just follow the number of people here, what are like the main benefits of having a stock listing? And then obviously everybody knows what the question will be. The second question will be in 15 minutes. And just to start, it's probably a secondary argument, it's not the most important reason to have a stock listing, but if you have a stock listing, it can be very, very important for employer branding. I think for large companies, for example, from personal experience, employees of a company identify themselves maybe even a bit more if your company is stock listed, if the stock price reflects, of course, the fair value of the company, and they also have the possibility to have more insight in what the large company that they are working for is actually doing, because they can also, of course, read all the public information. So it's a secondary argument, but I truly believe that a stock listing can be more beneficial also for employer branding and as a motivational item towards your employees. But we'll try to follow the list and try to find, in the end, 5 reasons to do that. I don't know if there's anyone who wants to go first.
Well, one of the first reasons why you should consider a listing, and if you look from a pure accounting perspective and the build-up of the balance sheet, it's equity. You use it basically as a funding source, as an additional funding source. And that makes a lot of sense, but then you need to go through a whole list of reasonable and sensible arguments, how you do it and why you do it. Because when I was at BNP Paribas as a head of corporate finance, we had a lot of clients who were thinking about listing. And one of the core questions is, why would you do it? What's really the purpose? What do you want to achieve? And what we noticed is that in many cases, people were thinking of it for different reasons, but did not realize that it doesn't make sense if you are, for example, too small, and if you don't use it or you cannot use it as an active funding tool. Of course, there are around that a lot of other reasons, but in the first instance, it is part of a funding strategy or should be part of a funding strategy.
I mean, that's right. I mean, of course, you mentioned it as well already. Access to markets is important, but you really have to judge whether access to markets supports the growth model of the company you want and the growth you want to achieve. I mean, if a company, and that's my view, if a company creates so much added value and so much cash flow, and when I say cash flow, I mean free cash flow, that it can fund its growth patterns in the markets, then I would say it's not necessary to list from a funding perspective is concerned. I mean, we have been we have been listed since 1991 when we took over CMB, and a lot of people here present were there at that moment already. And obviously, this was a story of David buying Goliath. I mean, we were much smaller than CMB with the family group which we were running at that time. And so basically we did a reverse merger, and as a consequence, CMB was listed, we were not. As a consequence, we were listed, so we didn't have actually the choice. Because otherwise you put so much debt on the structure that something happens with interest rates, and that there your profitability goes. There's a second reason. I do not follow 100% the story of people who feel much more committed to the company if the company is listed. I mean, I'm chairman of DPG Media, where we have schemes, option schemes whatsoever for a non-listed company, where we have option schemes who really creates the bonding between the people and us. And we treat that very seriously, and that's also a method of linking the people, having the people committed to the company. So that's one element I would like to mitigate a little bit on what has been said. But for me, a very important point for a listed company, and we try to do that and to transfer that also into non-listed companies where I'm on the board, is the fact that a listed company obliges you to have a very profound system of governance. And from time to time in non-listed companies, I mean, which are then controlled by family groups and all these type of things, which comes out of a tradition where basically the pater familias has created the company, the children come in, they work all very well together in that scenario, and but still a family business, and governance from time to time is not always present. I think this is really an added value which the example of a listed company could give. Again, I will take the example of DPG Media. Since I am on the board of DPG Media, that's already 25 years, so it's already a very long time. We always have had more independent, non-family members as member of the board. The majority of the board members were non-family members. And that creates a sort of wish to have governance with all the sort of committees you need, so that at least you have a check on what you're doing and how you're doing it with the real market. And then I think listed companies and the governance created around that by the different codes we have had and we have lived. Not everything is good in these codes, I fully agree, but I would give that a lot of credit for a reality check of all the sort of companies. That's something I would like to highlight.
And I agree that's also something that we see, for instance, in small biotechs, that listing gives them like a boost in professionalism and in organization. I agree. I think many of the benefits have already been mentioned. What we've so maybe access to capital, being able to do acquisitions with your shares. What we see in private equity environment is that it's used as an exit, like as delist. These are typically a bit complex transactions because very often it's a dual track, and so it depends ultimately on the valuation. And the same idea of liquidity, we saw that again in the 90s with the more family companies going to the market, where it was an idea of liquidity and succession and keeping the entity in the family rather than going to look for capital. And then maybe just another, I think, interesting reason to list that we've seen recently is the partial demerger, like the DME and the sort of a split up, where you have several businesses in one entity, and so the multiples are a bit blurred, and then the idea is that the valuation of the sum of the parts is higher than the existing company.
Actually, on the governance, last week we had an event where we invited Frédéric Pouchin, the CEO and founder of Whitestone. So Whitestone, so it's a private company. In fact, it used to be a private company, and they did a takeover bid on Evadix. Evadix at that time was only worth 400,000 euros. That was the cash on the balance sheet. They took it over because they wanted to get listed. So it was successful, but they didn't go up to the squeeze out, and so they are still listed. They raised some additional money through a private placement, and the company today is worth 24 million euros. And it's a very light structure. I think that there are maximum 5 or 6 people employed by the company. And what he explained was the fact that being listed for them was the extra push to be more transparent, to be more professional, to be stronger in the governance. And he saw that really as an opportunity to be better than what they used to be. They were quite ambitious when they were still private, but the fact of being listed and having these challenges of the regulation helped them a lot to do the extra mile and take the next step. And I really like the energy that he was bringing to this, because I often hear the story of the regulation. That's one of the issues related to the listing. But what you see today as well is that you have more and more regulation that's applicable to any kind of companies, be it listed or non-listed. Take CSRD. If you're a large company, whether private or public, you will be bound by CSRD. And you have kind of transversal legislation, and the fact of being listed is not an extra burden. You still have some other kind of regulation which is very specific to being listed, like MAR or stuff like that. But that's normal. But the listing brings you this extra motivation. And what also strikes me when we hear the feedback of CFOs, CEOs, founders who bring their company to the listing is the extra publicity, the extra visibility that they get, quote unquote, for free next to the IPO trajectory. And for some of them, it's totally unexpected. They have this on top of the visibility that they have with investors, with the regulator, with the exchange, etc. But that brings them leads for new partners, new employees, or new clients, which comes with the listing. So I would say that, the governance and the visibility, credibility, that these are two strong assets of listed companies.
Thank you for that. Governance comes back a lot, and I think indeed it sets the standards quite high if you're a listed company. Obviously, the opposite question is also relevant in your observation. What would be arguments, reasons for a company to delist? And I'm very happy to start. Of course, short-termism and the short-term view of the financial markets is very often quoted. So I acknowledge that that is a difficult process to manage. If you as a company get stuck into a very intense communication with the financial markets on short-term results, it can be a very tough nut to crack. And sometimes you see that companies have difficulties with this continued focus on short-termism. So I do consider that a reason to reconsider a listing at some point in time. But there are probably other arguments as well. So I would like to do the same tour. If anyone is happy to go first, otherwise I always take Wim as the scapegoat. All right.
Okay. So here we go. If we look at the companies that I worked on personally for delisting, there were always different reasons why they delisted. Now, one of the usual ones, and I think we will certainly agree and come back on that, is that the intrinsic value of what the company is worth is not reflected in the stock price, and that people don't understand it, and that brings back to the volatility and well, a lot of problems and issues in the market. Now. Other reasons are from a completely different order. Let's take, for example, the delisting of Omega Pharma. When Mark called us to delist Omega Pharma, it's clear that there was already a much larger and different agenda on the table, which they wanted to complete without disclosing everything in the public. And if you see what happened, it was delisted at X. But when they sold it on later, it was a multiple of X, yeah? And if you look at the activities, and of course with hindsight, you can comment a lot on it, what happened, but the basic philosophy was that there was a clear growth agenda which they had in mind, and to do that without showing that to the outside world, and also without sharing it with the outside world. That's another question. When we worked on the delisting of Spadel, well, Spadel was one of the rare water producers which is listed. So it means that if you look at water as a product, it's part of a lot of big groups. You have Nestlé, you have Danone who had water, you have PepsiCo who have water, and it's a division. So nobody sees how much money is made on water. And Marc Dubois, at that moment in time, he also had a vision and a view and a strategy which he wanted to develop. But he was afraid that if his suppliers would see how much money he was making, that he would become under pressure, especially from the large retailers, to give in on the margin, number one. And two, he had fantastic ideas, and today we can tell you about it, because in the meantime it's implemented. That was all the trend towards the waters with a taste, yeah, with a healthy taste, without sugar and so forth and so on. So that was a clear reason why he wanted to delist. There are good reasons why he failed, but that's something for afterwards. And I can give you a number of examples like that, why people decided to delist. But I'm happy also to hand over the microphone to my colleagues.
Yeah, indeed, to delist. I mean, it depends a little bit on what business you are, but I mean, the profession I've been in is shipping, as you all know. And it struck me that there were only a couple of minor periods in my 40-year career in shipping where the share price reflected at least the net asset value, only very, very, very short periods. At least the net asset value, and we don't talk about goodwill or the way the company is run and all these type of things, which are the, call it immaterial surplus value, which should be reflected in a share price normally. This is for a real asset-based company like shipping companies are. And then you are listed. And then you want to tap the market. And basically you have to tap the market at a discount to your share price. Because that's normally what happens. But the discount to the share price, which is in itself already discounted to the NAV, makes it rather difficult and value destructive in order to raise capital and to raise money. So if this is the case and this is really there for the long period and the growth of the company can be sustained by cash generation out of the normal cash flows of the company, then in my humble opinion there is no reason to stay listed, to remain listed, and you should consider to delist. Delisting means, in most normal circumstances, to take a lot of debt on the company. So to build a business model whereby you delist can charge a lot of heavy burdens on your balance sheet as well. So it's a complete vision you need to have on how your business can be run. Another element is, I mean, and particularly I took for the business I was in, again shipping, I mean decisions in shipping are taken with a blink of an eye. And they are taken very fast, very quickly, and if important decisions have to be taken, which needs to go to general meeting of shareholders and all these type of things, I mean that can take time, and in a very volatile market, which this market is, can make something reasonable today, but completely irreasonable tomorrow. That's how it works. And that's how shipping works. And you remember, as I told you, in '91, we were listed because we had no choice. In 2003, we did one of the first partial splits of the companies. In 2003, CMB, Euronav for the tankers in one hand, Exmar on the other hand, and at the end of 2004, we did a second round where we listed Euronav. I mean, this was, in principle, to get value out of the shipping business because we focused on a one-modal transportation type of product, tankers, dry bulk, and gas. And we have seen that in the beginning, that indeed the people, the market, gave some more additional value to these very clear, defined product lines. After a short while, it went down, we went again to the discount rates, and then it's very difficult to explain to owners where the basis is a family business, and that's not only in Belgium, that's also with our competitors and our colleagues elsewhere in the world. This is a typical family business. I mean, it's very difficult to explain and to ask them to consider to be listed.
I think I can be quite short because it's true that clients complain about the cumbersome regulatory and compliance procedures and MAR and things like that, but it's not the reason, the main reason to delist. It's clearly financial, and whether it's opportunistic or not, it's mainly related to that. But maybe just more in general on the disadvantage of being listed is indeed a lot of paperwork and governance and rules, which to a certain extent also apply to non-listed companies. I think also, and it's mostly for companies that do not have a family or a controlling shareholder, that there is not only activist and sometimes annoying shareholders, but that you also have a vulnerability towards unsolicited takeover events at a time that are not opportune for the company. So putting yourself on the stock market, you create some vulnerability, I think.
Do I have a joker? No, I mean, every story is different. But I'd say the good reason why you would delist if you promise to come back a few years later stronger, or like Mark Kokke did with, for instance, EcoPack, if you promise that you will list some of the companies that are in your family office, and hopefully Mark will bring some other companies soon to the exchange.
That's a good sales pitch, good one. I think I'm conscious of time. I think we still have a bit of time to take some questions from the audience, if there are questions.
I think the last one was a good point that you were making. We call it the Hilton case, that large stockholder companies need to delist, to restructure, and then go back to a listing process when they have been restructured, let's say after 4 or 5 years, through an LBO process. I get the impression we see that less than before. It was a classic when we were in the years 2009, 10, or what have you. You had a number of companies delisting, restructuring, getting back to the stock market. I get the impression nowadays you see that less. Is that an impression, and is there a specific reason for that? For the companies that delist, restructure, but do not go back to the stock exchange?
Yeah, I think that the last case in Belgium was Ontex. So that's already a few years back. Yeah, I don't have many statistics on this one. I should dig into it. But yeah, in Belgium, yeah, the last one is almost 10 years back. So. Yeah.
Anybody else?
Yeah, there's a question there in the back.
Thank you. I have a question on the fear that we have as a banker, that a lot of companies will disappear, and you also mentioned the valuation argument. Is there anything, and I'm actually pointing at the stock market itself, that we can do maybe to protect that? And what I see when I look at the markets now, I see that stocks that are in ETFs, and mainly US and foreign stocks, they thrive, their valuations go up a lot, our valuations go down, and at a certain point they become so illiquid that they're not even interested or interesting for international investors. So my question is really, what is there anything we could do, like maybe make our own ETFs and list them on the stock market that group these smaller companies in order to protect them, that they go down this slippery slope of, you know, self-fulfilling, low liquidity, and in the end, become a target for private equity, because that's how I look at it. At the end, they become so cheap that they disappear.
So I think the question is for
yes.
you. Yeah. If you look at the evolution of liquidity of the last years, we've seen a massive drop this year in particular. So this is not only in Belgium, but it's throughout all the venues in Europe. And yeah, that's a major concern. And the companies which are the most hit by this are the ones which are in the Bell Small. So to summarize it, the companies with a market cap below 150 million euros. I take a shortcut, but that's the point I'd like to make. So I think those companies today, they have a daily volume of less than 2 million euros. So the concern is mainly on these very small companies. So we try to do different things to have this evolving. For the larger ones, we try to come with new indices, like the Bell ESG that we launched at the start of this year. We try also for more tech companies to gain extra visibility with initiatives like the tech leaders that we have. And then for the smaller ones, we are advocating for reduction of withholding tax in order to increase the attractivity for retail investors to invest in these companies, so that the withholding tax on the dividend would be lower to 15%, because that seems to be the right level for the withholding tax, if I look at the state bond of September. And yeah, we want to increase attractivity for the smaller companies, to have more liquidity and to increase the valuation of these companies, and also to increase attractivity for institutional investors towards these companies, because some of them are kind of in a negative spiral, because the 50 to 60% from the liquidity comes from retail. And yeah, at one point in time, that's also a weakness, and you need a sound level of retail investors into your daily liquidity. And yeah, we'd like to work on this. Unfortunately, I started in July. I hope that Vincent would give me the magic stick to transform everything. I haven't received it, but we are working on different files to make this evolve.
If there are no further questions, I would like to thank the panelists for the enjoyable and insightful conversation. So many thanks, Benoît van den Hove, Sophie Rutten, Ludwig Kriel, and Wim Goossens. Thank you very much.
We are ready to go to the second part of the program, the evening. Good evening, everybody. The remodeling that has been done is not because I want to walk on the podium, but so just have a better visibility on the screen. Also screens left and right, very useful for me at least. So for those who are not very familiar with this award, with this survey, there are not many in the room, I'm sure, but still there are some. A very short introduction first. This survey is actually made up of two parts. And in the first part, we ask analysts to fill in a questionnaire. And in this questionnaire, there are some 24 individual questions on different aspects of financial communication. That's the first part. That took place mostly in the month of September until, let's say, mid-October. The second part is, at the end of the survey, we ask the analysts to make some comments. And we have been putting more emphasis on this for a number of years now, because that actually gives a lot of useful feedback to the companies. So next to the scores, they also get some comments on what the analyst thinks is developing well in communication practices at this company, or what could be improved. Now, if I tell you that we have screened some 49 companies this year, with 58 analysts participating, one of the record, I think it's a record number. And if you know that we encourage the analysts to do a screening for at least 3 companies to make it a little bit efficient. And knowing that we have asked to the analysts to give at least 6 comments on each company, so 3 good examples, 3 things that could be done better. If you add it all up, I did the math, you get to a total of more than 1,100 individual comments. So what we wanted to do is show you this evening a selection of comments from these actual surveys, and that can allow us to have a good discussion, or at least a presentation by myself, of current practices and best practices in financial communication. Of course, we have been very selective. We have tried to avoid the comments that are too company specific for obvious reasons. And anyway, all the companies that are member of the Belgian Investor Relations Association will receive from Belir, I hope later this week, Wim, a detailed report with all the individual scores and all the individual comments from the participating analysts. So this being said, I think we can move to the first set of comments, or the first comment. It's actually under the umbrella of what we call financial reporting. So this has to do with everything on communication of financial results, the results we find in the annual report, also in the press releases that we get on an annual, semi-annual, sometimes quarterly basis. But it's more than that. We also look here at the communication on the competitive positioning of the company, company-specific risks, etc. The first quote is a very simple one, a very obvious one, but I had to show it again, I'm sorry. We still see that some companies, when they present full year results, do not break down these results in first half and second half numbers. Now, when we get the full year results, of course, we already know the first half results. We've received them 6 months earlier, normally. So we actually want to know what has been the performance in the second half of the year. So just make life a little bit easier for us, break down the numbers in H1 and H2. And if there is a reason why you're not so keen showing H1 to H2, maybe because there is a seasonal impact, you can always add the second half results of the previous year, so that we can easily compare the second half of the current year with the second half of the previous year. Thank you very much for doing so. Most of you, of course, already do so for many years, but still there are some, even of the bigger companies, who do not make this breakdown. Okay, we have a second number of quotes, and they have to do with operational costs. If we read an annual report or if we read a press release with financial results, we often see a table with numbers, key numbers, and then there is usually a number on top line, of course, the revenues or even gross margin, and then we fall back to EBITDA, sometimes EBIT. But everything in between, we lack a little bit of information. So everything that has to do with raw materials and relevant operational costs, we really would appreciate a little bit more transparency on that. Every company has a number of relevant operational costs, be it staff related or energy or insurance or research, whatever. There's always a number of relevant costs, and for every cost there is a volume impact and a price impact. We are really lacking some information there. We would feel more comfortable if we got information on these costs. So I think the scores on this item are quite low, and this is especially certainly a way to, or a possibility to improve your transparency. The next one, the next set of quotes have to do with the number of shares. It's more exceptional that we see this, but sometimes when companies present results, we don't have the number of shares that they, we don't see the number of shares that they have used to, for instance, show earnings per share, which is of course a very relevant parameter. And especially now that so many companies are buying back own shares, and the number of shares is not a static number, it can change. It changes a lot for a lot of companies lately. Companies buy back shares. The shares that you have bought don't receive a dividend, so that has an impact on the payout. Shares that you buy can be cancelled. There's an impact on earnings per share. So it really appreciates good transparency on the evolution in the numbers of shares. Okay, some companies already do that. I could give a number of examples, but here also some companies can do a better job. This is yeah, something that we looked at in particular this year. It's also an evolution that next to receiving a press release with financial results, there is a more detailed report behind it. I just want to ask your attention for making sure that if there is such a result, such a report, that you make sure that everyone knows that there is such a report and that it can easily be accessed. As you can see, please add link in press release with financial results to website or to H1 report. And if you do include a link, as one of the analysts mentioned, make sure that the link is the right link, because sometimes it does not always bring you to the right place. Next one is on the APMs, or alternative performance measures. Free cash flows is of course a very important one. Most analysts still use that to calculate DCF values. But there are many others like net debt and EBITDA and non-recurring items. Of course, they are by definition non-IFRS, so it's not always clear what the definition is behind these parameters. It's good to show them because often they add value, they give you useful information. They can be company or sector specific, that is true, but they usually add something, so it's good to have them. But if you mention some APMs, and especially free cash flow, which is one of the more important ones, please make sure that you also add a definition and please also a reconciliation, so that we can clearly see how you have applied this definition. And some do this via a bridge analysis. That is very useful. Already some companies apply this, but many others do not. This is clearly a trend in financial communication, that we see more and more of those APMs, and if you do show them, please also do a reconciliation. Something very new, of course, artificial intelligence. I guess this is something like the internet 20 or 25 years ago, when we discovered there was something new like the internet, and we wanted to know how this changed the business model of so many companies, if it was a plus or not. So here I think it's quite clear that as we are talking about a bank, some of the analysts, or one of the analysts in particular, asks to show the impact of AI in banking, the impact on company and the clients. And the second quote is from an analyst in the healthcare industry, asking for a seminar, especially on AI. I think it's clear that AI is said to be very helpful in discovering new drugs. So I'm pretty sure that next year or in the coming years we will have many more of information that will come to us regarding the impact of artificial intelligence. If it changes, if it impacts your profitability, your development, your growth potential, please let us know. That would be a plus. Yeah, next one. When I read analyst reports myself, there's always a lot of emphasis on the P&L. That makes sense. Also on the cash flow statement makes also sense. But often there's not so much interest in the balance sheet. And also when I read press releases with financial results, there's not a lot of information on the balance sheet. I think you should really consider that if there is a significant change in one of the lines in the business, in the balance sheet, sorry, assets or liabilities, non-financial liabilities here, it can be related to stocks, or as this analyst in the first quote says, trade receivables on the liability side, change in provisions. This really tell a lot of stories about clients not paying as timely as they used to do. Can point to some risks. Provision side also can point to increased environmental risks or legal risks. So I think companies should also make sure that there is good transparency on the balance sheet, not just interest in the P&L or in the cash flow statement. And then it's a small step to last quote on financial reporting, and that has to do with communication on your debt position. We have been going through a period of ZIRP policies by central banks, at some moments even NIRP, negative interest rate policies, but that is behind us now. For the past 2 years we have seen a spectacular increase in interest rates, and I can imagine for many companies that makes it much more difficult to refinance or to finance expansion. So this is more than ever the time to be very transparent on your financial solidity, your financial structure, the refinancing conditions, the maturities of your debt, what do the rating agencies have to tell about your financial structure, are there any covenants that are at risks? So all this is very relevant for the moment. Do I have to remind you of all the real estate companies that have been coming to the market to raise capital in the past 12 months, even yesterday or today, this morning, there was another one. So we think this is really a very important issue, and we earlier this year with board members of ABAF BVFA, we decided that this year we would give a sub-award to the company that has done the best job in communicating about their financial position. So this is now the moment that we can proceed to the first award of the evening, the rotating award. It's a different subject every year. This year it's on communication and financial debt. And I propose that we show the best performance that came out of the survey. You see the top 5 countdown, and the top performance came from Cofinimo. I see we have with us Mr. Jean Kotarakos and Lynn Nachtegaal from Investor Relations. I don't know who will be receiving the awards. Lynn Nachtegaal from Investor Relations. Thank you. Congratulations. Okay. Time to move on to the second set of quotes. And they have to do with forward-looking information. We also have an award for best communication about forward-looking items. The first one, the first set of quotes, or the first quote, also very straightforward, has to do with publishing a calendar. Forward-looking information here, we're talking about your strategy, your future strategy, also your communication on guidance, your outlook, but it is also publishing a calendar with relevant upcoming events is part of this segment. And especially at the start of the year, we find that these calendars are relatively well filled, much better compared to the latter half of the year when there are less relevant events taking place. But especially at the start of the year, we expect to find a calendar on your website and also on all the press releases that you publish, mentioning your date, the date of your next annual general meeting, and also if you pay a dividend, the ex-dividend date. It's useful to put in our agendas. It explains, of course, why on a certain day the stock goes down with a certain amount. That has to do with the ex-dividend date. Again, it makes our life a little bit easier if you would systematically put this ex-dividend date in your calendar and put the calendar, of course, on the website and in every press release. The next quote, I have a few quotes on outlook and guidance. Some quotes, language used is sometimes not very clear. The guidance could be more specific. Please avoid terminology like satisfying results. Please avoid confusion by talking about improvement in margin when presenting guidance. Now we can understand that at the start of the year, you don't really know what the result of the current year will be. You are a little bit vague. You can expect higher sales or higher profit numbers, but you don't know what to quantify. We're perfectly okay with that. You can mention a range, also always a good start. But still, as the year progresses, of course, we expect guidance to be more concrete, more precise, more narrow. Language like we expect satisfying results, of course, is not what we consider to be a best practice, because satisfying, what is satisfying? Satisfying for who? For you, for us? Also, when you say that you expect an improvement in margin, are you talking about net margin, current margin, operating margin? So please use terminology that is well understood by everybody, and that leaves no room for interpretation. These are really examples like we see them every day. It's a minority, of course, but we just want to make sure that everyone knows what best practices are. Next one. Also on guidance and outlook, analysts asking to clearly flag and explain the changes in guidance, if any, and to also show a breakdown of the road to guidance fulfillment. That is always useful. I think it's good practice to give guidance, but also good practice that if you change the guidance, to clearly flag that. To maybe even explicitly mention what the previous guidance was, and also the reasons behind the change in guidance. Is it market-driven, circumstances in the market that have changed? Maybe there have been some company-specific events that explain the change in guidance. That can always be the case, but please be clear on that. I think here also there is room for improvement. Be as transparent as possible on the guidance and change in guidance. So that leads us to the second award of the evening, the award for best communication on forward-looking information, and we again will do a countdown. First about 20 companies, top 5, and then we show the meters. Small caps, not done yet. Let's see if there is a bit in small cap company that does better. No, there is not. So again, I have to ask. I have the pleasure to ask someone from Cofinimmo to step forward. So 2 awards to go to Cofinimmo. I wonder what the outcome of the evening, the final award will be. Maybe there will be a surprise, who knows. Anyway, let's move to the third segment. And the third segment has to do with investor relations. We every year give an award for best investor relations efforts. A number of quotes. okay, for the camera, okay. Have to be the male for the camera, but then I'm blocking the view of so many people. A quote is on appointment of dedicated IR people, and also, as has been the case when CEOs come and go, investor relations people come and go, please a dedicated investor relations person instead of a CEO. Yeah. I wonder what it would have been if it was the other way around, the CEO instead of an investor relation. No, I think best practice is to have a dedicated person for investor relations, because there is so much to do on investor relations, and a CFO has many other tasks I can imagine. So, of course, it's an extra burden, it's an extra cost, but I think it's worth the investment. I do have to admit that there are examples of companies without a dedicated investor relations person, and I talked to one just earlier this evening, Johan Nelis, who was doing also this job as investor relations at CBEF, and he was very well regarded by the analyst community. But anyway, I think in general the rule and the best practice is to have someone dedicated in investor relations. Also for Wim, for your business, it's better to have someone dedicated, of course. Now we can go to the second set of quotes. Please invest or invite buy-side analysts and investors together with the sell side and create a level playing field. It's not only about creating a level playing field. I think it's certainly an argument in favor, but there are other. I think by necessity, especially small companies can use all the attention they can get, and if it's not from sell-side analysts, and please also make sure that there are people from the buy side, from the investor community invited to your calls, to your events, to your meetings. That could certainly help to get the information through to a wider audience, and at the same time, of course, also create a level playing field. Banks and brokers, they know the investor landscape quite well, so they can really help the smaller companies to organize these meetings and make sure that everyone who has to know about the company is present or has the opportunity to be present. Next one. Deep dives are better than webcast updates or other meetings. Deep dives, we never talked about deep dives. I think what this analyst wanted to tell us is that sometimes meetings or even capital markets day, those have become quite common. Remember that last year the rotating award that we gave was on the organization of capital market days. I think deep dives or maybe also teach-ins, they are not so common but can be very useful when the company has a complex business model, made a big acquisition, or is confronted with changes in accounting rules, I can imagine, like my colleague at Analyst Association recently mentioned that in insurance, for instance, there is IFRS 17. I don't know if anyone from AGEAS is present here, but if he could or she could probably confirm that this is a quite complex matter. In such instances, organization of a deep dive or teaching could certainly be helpful. Also, for instance, for biotech companies, I myself, I'm not a biotech analyst. I once was present at a meeting with the biotech company. I came home in the evening feeling very stupid. I didn't understand anything of what they told us. So a deep dive session or teaching could have helped. That can be an idea for some companies to organize. Next one. This is on consensus. A lot to tell about collecting consensus numbers. I think when we did this exercise, we saw that some companies do not collect their own consensus numbers, but they refer to external data providers. We don't think this is best practice. Remember that if you collect your own consensus numbers prior to the publication of financial results, you have better control over the people contributing to the consensus numbers, and also you have a better control over the numbers that you are asking for. So please, good practices, best practices to collect your own consensus numbers. Also, of course, make them public. Put them on your website, make sure that everyone can see them, not just the analysts who participated in the consensus exercise. How many times a year do you have to do that? One analyst said, please increase a bit the frequency of consensus gathering. I would say at least twice a year, before publishing the full year results and the half year results, maybe the quarterly results, if you have any, that would be fantastic, but twice a year would already be great. Maybe one of these days we will do a sub-award on gathering consensus, because I think it has been mentioned by the panel also, erratic or unexplainable moves in stock prices after you have presented very solid results. Maybe it has to do with the difference between expectations and what you have delivered. That can be a reason, can be an explanation. I know that many investor relations people see it as a negative when the stock price moves after having published financial results. They want to avoid that. Well, having a good idea of what the expectations are in the market can help to reduce this volatility. So this leads us to the third award of the evening, the award for Best Investor Relations. And we do the countdown. We have D'Ieteren, Barco, Proximus, Ilia, and Solvay on the Bell 20 side, and the mid and small caps. Can anyone do better? Yes, Kinepolis can again. Just like last year, because you also won this award last year. Congratulations. It was no coincidence. Thank you very much. We have a number of quotes that we wanted to share with you outside of the segments that we have dealt with already. I think these come, I didn't check it, but I think these three quotes came from the same analyst. So the first is, I will read, the CEO is able to admit that some segments perform below expectations. Not all managers can do that. And I think it was about Ackermans and Van Haren. The second one is, please, less hollow cheers and more honest comments. And be candid about bad market circumstances or outlook. No good news show, please. So actually, this is a call to be very open also when markets are against you. That is always appreciated by the analyst community. Don't hide these kind of negative developments. And some other quotes. I leave it for the analyst who put them in the survey. Shorten the annual report. There is too much detail. Okay. And I'm not saying that this is a general feeling, but at least that is what this analyst wanted to share with us. Next one. The half-year report has some predominantly black pages using a lot of ink when printed. So you know what to do. White pages, please, instead of black pages. And this one is a very nice one. I really wanted to show it. I think it's my favorite. Your website mentions 42,000 employees. A little bit further, 40,000 talented employees. So you have 2,000 losers running around. Okay, make sure that you read your annual report in detail and that this kind of comments are a one-off. And then the final one, it's early in the year, but someone wanted to send us his or her best wishes. So with that, I think we can proceed now to the final two awards of the evening. We have the award for Best Mid and Small Cap. We do a countdown. Yeah. Top 5. Bekaert, Ontex, CPEF, Telenet and Shurgard. Yeah. I think we have Mark Roosbank, Finance Director of Shurgard. Congratulations. Shurgard only its third participation in this exercise, in this survey, so very well done. Also, so that Telenet was in second place, just because it's the host, I wanted to mention it. And then the final award is the overall award for Best Financial Communication 2023. And that award does not go to Cofinimo, but goes to Shurgard again. Yeah. You beat Solvay. That is a very good performance. I think this concludes the awards, and I don't have much more to say, actually. I know, Mark, if you had a few words to tell us. Next year, of course, you can give a speech, or your management or your colleagues at Shurgard. Yeah. Sorry, Thomas.
So yeah, thanks a lot. Oops. Usual mistake. So thanks a lot, ladies and gentlemen, and esteemed analysts, as they say nowadays. Obviously, we are extremely excited, being new in the game, and we were just in the capital market. And I have to say, despite what others say, we are not only there because we need the money desperately to deleverage. We wanted to get the money while it's worthwhile getting it. So we are obviously, as all finance organizations, trying to work extremely hard on being transparent and being clear to the market. So I'm extremely excited for the team that, we could demonstrate that with this award. So very, very glad and very honored to be here. And we will try to work harder with you on the next year and even win the other awards, because I see that others are able to get multiple awards. There will be healthy competition going forward on that. Thank you very much.
Thank you, Thomas. You know that you will have a very, very heavy task this evening, because you will need to take the vase home and not drop it somewhere. Okay, ladies and gentlemen, we come to the end of our evening. I would like to invite you to our receptions. Before I do that, I would also like to thank a number of people that really helped us enormously. And that is, of course, first of all, our sponsors, Telenet and also Bellier and Philifin Academy. So I can say thank you to Telenet, Anne, thank you to Bellier, Wim, thank you to Philifin Academy, also Anne. So thank you very much. I would also like to thank, secondly, Telenet, because of the complete organization of this evening, and the reception will be offered also by Telenet. And we have done a terrific dry run and a terrific performance tonight. Thank you for Annick, who is leading internally the Secretariat of ABAF and making sure that this award is, of course, taking place. Thank you to Luc for his 17th edition of organizing the award within the Belgian Association of Financial Analysts, also with the support of other people, and thank you to the board. I hope I've not forgotten anybody, and otherwise we will need to discuss that over a glass of wine or a glass during the reception. Thank you for your presence, and we will meet again here, but one floor downstairs, because reception is not at this level, but it's one level down, and we have the opportunity to still do some talking to one another. I think the photographer will want all the winners together for a couple of pictures before we go down. And the winner of last year, which is Telenet, of course. Thank you very much, ladies and gentlemen.